Hello everyone, welcome back to Accounts is Easy. Yes, this is Kavita Ravindranath teaching you accounts in the most easiest manner. So I hope you've gone through the last video and we've got the gist of it mostly. Please feel free to ask any queries if you want, if you have any. I hope the explanation solves all your queries already. Okay, now see, there are certain things which we need to understand here, and some of you might just be not understanding कि यहाँ पे हो क्या रहा है, meaning the sequence, the flow of the things. Okay, although you are supposed to be knowing that, meaning in class 11 you've already done your final accounts, but still that connection, that flow. Okay, so today I'll just try to make you understand that very quickly. Here it is. In your final accounts in sole proprietorship, you already have a taste of the trading and profit and loss account. Till here you've already done. Just to recap, trading account, we credit here the sales, the closing stock if any, and we debit purchases and other direct expenses, opening stock, things like that. If you remember direct expenses like wages, manufacturing expenses, factory related expenses, those are called direct expenses. And please remember all this, because all these concepts will again be required in other chapters as well. So please have constant touch with all of these concepts. You can't forget all this in class 11. It's not a closed chapter. Class 11, oh, done, forget about it. No. All those concepts of 11 are applicable and required in class 12 also and furthermore. So you've got to know that. So now if we've put this here, these are the incomes, revenues, and here we have the expenses, and the difference would have given me the gross profit or gross loss also, which was transferred to the profit and loss account. From here to this account, it would come the gross profit by the trading account, right? So if you remember these entries, the journal entries here, see, this is trading account debit and it is PL account credit. That same effect is coming here. This is profit and loss account, credit and debit, trading account. So this is how your gross profit gets transferred here. Same thing. Now next, moving ahead, other incomes like discount received, commission received, rent received, interest received, all these are other incomes that we credit here. And all the indirect expenses. Direct expenses are gone to trading. Indirect expenses like office related, administration related, depreciation, amortization, salaries to staff, wages, wages is direct, salary to staff, then your advertisement expenses, electricity, rent paid, all of this were indirect expenses, so will be coming here on the debit side, right? So here rent to partner also a special mention here, because this is partnership, and anything paid to the partner usually is an appropriation like interest on capital, salary, commission, etc., unless otherwise specified. But rent to a partner is not treated as an appropriation. It is treated as a charge against profit. Please understand this word, charge against profit, meaning we debit this expense to the profit and loss account to calculate, to arrive at the net profit. Alright? Any of these things appearing here on the debit side are all charge against profit, meaning we have to debit that, we have to deduct that from our income to get the net profit, to calculate net profit. Distribution will come, of course, later once we calculate, right? So this is a charge against profit debited to profit and loss account. That's your closing entry, if you remember. PL account debit to that particular expense, to rent, to salary, to commission paid. That's the closing entry. So this charge against profit is all debited to PL account, and it goes in determining the profit, net profit. Now where will this net profit go? In the sole proprietorship, it was transferred to capital account straight away. We used to add it to sole proprietor's capital account. But here we have more than one owner, so This needs to be further taken to the next account, which is the PL Appropriation Account. So it comes from here to here, the net profit, the amount. We write here by profit and loss account, not by net profit. Okay, this is by profit and loss account because it is coming from the profit and loss account. Alright, so here you need to keep this in mind. This is how things are coming. Very importantly, now this is profit already determined. Okay, even this rent to the partner has been debited, and after that this net profit has. One more important thing is interest on loan, as we were discussing in the previous class. If a partner has advanced a loan to the firm, the partner will get interest from the firm. That interest is an expense for the firm, will be debited to profit and loss account, not PL appropriation. So this is the difference between a charge, and here we have all appropriations of profit. Okay, this is a charge against profit, this is an appropriation of profit, meaning once I have profits and I have sufficient profits, I will give the partners their interest on capital. If they are supposed to get any salary or commission, all of that will be given. If we are creating a reserve, we will transfer the certain amount to the reserve. Reserve meaning corporate savings, right? A person who has salaried income will save a certain amount, invest it somewhere, right? That is what is going to serve as a financial strength for him to face, future emergencies, unforeseen expenses, etc. Same thing, the business also needs to strengthen itself and create reserves out of profit. Whatever profits it has earned, it can't give it away to the owners completely to be withdrawn from the business. No, something has to be retained in the business, okay, for further growth and advancement. So this is to reserve. Transfer to reserve. Now you will give the remaining profits, meaning divisible profit. Of course, we can have on this side, we can have interest charged on drawings of partners. Alright, this we are charging from the partner, so it increases my available net profit. This I am going to give to partners. This also will be added to the net profit. Total it up, subtract all of this, and this is the divisible profit or distributable profit. This we distribute among the partners in their profit sharing ratio. So this will go to partners, capital account or current account. We will discuss what is capital, current, okay. So capital of course current we will discuss. So current account or capital account, this we will transfer. Understood? So these are all appropriations. To which account am I debiting all the appropriations? PL appropriation account, not PL account. Where am I debiting all the charges against profit? To the profit and loss account, not here. Alright? So this entire thing, I hope you would feel it. This is important, something you did not know, did not understand earlier. Please make a note of it. Alright. Now, let's move on to, as in the last class we did the treatment of interest on capital. We'll just go through the entries related to rent and a quick sum to understand how things are shown in the profit and loss account. Ready? So here I have taken a small sum for you. I'm reading it out for you. Question says, A, B, C are partners in a firm with capitals of, as on 1st April 23, A 2 lakhs, B 1,50,000 and C 90,000. C advanced a loan of 1,20,000 on 1st August 23, carrying 10% per annum interest. A took a loan from the firm, rupees 50,000 at the rate 5% per annum, and I'll just add the date here. On 1st November. Alright. on 1st November and be allowed his premises to be used by the firm at an annual rent of 25,000. Profit for the year before these adjustments were made was 58,750. Prepare C's loan account, partner's capital accounts. Also show the effect of the above on the profit and loss account. So now you have to understand, out of these, here you have to make a lot of things, adjustments. Capitals are given here, but main thing here is to calculate the interest on loan, right? C advanced a loan of 1,20,000 carrying 10% interest. So we have already done how to calculate it, right? So he is giving a loan of 1,20,000 at the rate 10% per annum, and he advanced it on 1st of August to start counting from August. Include August. August, September, October, November, December, Jan, Feb, March. 8 months. So you should be charging interest for 8 months. This is interest for C's loan. Okay. So this comes to 8,000. So we need to give interest of 8,000 to C. Done. Similarly, A has taken a loan from the firm. So interest on A's loan will be 50,000. The rate is 5% and the date on which he has taken the loan is 1st of November, okay, 23. So 1st November onwards, November, December, Jan, Feb, March, 5 months. We need to charge him interest for 5 months, okay. This is 100, this is 12. So please check this. Oh, this is okay. Hold on. This is 60,000. This is 60,000. Please make that correction. 60,000, and therefore this comes to 1250. Please check that. 550. 1250 is the interest on loan on A's loan basically. So now we have calculated both the interests and we know that both are supposed to be closed by transferring to profit and loss account, right? Now how will this affect the profit and loss account? Let us see that. Here let us make the PL account here and just show very shortly. You see, we don't have the entire profit and loss account details. Do we have? No. We have, before giving effect to all of this, the profit was 58,750. So 58,000, obviously profit, that means my credits were more. So here I am bringing down the profit for the year is brought down, which is 58,750. Since you don't have any other information, I am just starting my PL account with this available profit figure. Done? And then we put all of this here. This and the rent that B is supposed to get. B is supposed to get an annual rent of 25,000. All this is a charge against profit. This is a charge against profit. And this is my regular income, right? So here I do 2. Interest on C's loan, 8,000 debited, charge against profit. To B's rent, 25,000. Both these will be debited because these are my expenses. This is my income. This should go here. Interest on A's loan, 1250. So this is the effect. This is how we correct the given profit. This is not my correct net profit, final net profit. Until and unless I incorporate all the charges and my direct income there, I cannot say it's a net profit for me, the correct net profit. Let's find out the correct net profit. This comes to 60,000. Subtract that, 33, 27 left. 27,000 is my actual net profit. This will be transferred to profit and loss appropriation account. From there, the partners will get their share of profit. Since ratio is not given, it is going to go equally, right? Now let's see how it is going to be shown in the partners capital account. So we are drawing partners capital account. What kind of account is this? A liability, right? What is the rule? Any increase should be credited, any decrease should be debited. Alright? We have the opening balances given to us. We do by balance brought down. This is A, B and C. A, B and C. Yes, we draw all the capital accounts together. Balance brought down 2 lakhs, 1,50,000 and 90,000. So always bring down the balance here first. This is what you do first thing, and then the entire year's transactions which will be shown here. So you start your account with the balance brought down. It will be on the credit side because usually capital accounts will have a credit balance unless it's specifically mentioned in the sum that the partners have a debit balance. Alright. So you brought down the balance 2 lakh, 1,50,000 and 90,000. Yeah, done till here. Now the loan part, of course, C has given me a loan, so I'll open a separate account for C, so that is not going to come here. So C's loan account we will be opening separately. Okay, we come to that. What about this? A took the loan from the firm, so the interest related to that will be debited to his capital account. So we will debit to interest on loan. 1,250 will be debited to A's capital account here. Remember, whenever a partner has taken a loan from the firm, the interest is debited to his capital account or current account as the case may be. So here it is capital account. Then B is getting this rent. This will also be credited to his capital account. Credited meaning he is supposed to receive it, right? We are not charging, we are allowing him rent. So this goes here. B credit 25,000. Whenever a partner is going to receive something from the firm, please put it on the credit side. He already has 1,50,000 invested. He will get another 25,000. Now he is supposed to get how much from the firm? 1,75,000. That is how the capital account concept works. Alright. Then we have this done. Now this share of profit. PL appropriation account, if you can imagine. Yeah, this PL appropriation account, if it is shown here, this 27,000 is the available profit here. No other appropriation is given. This will be going to partners capitals A, B and C equal. So 27,000 divided by 3, 9,000, 9,000, 9,000 to each. So we are crediting to partners capital. Their share of profit should be coming on the credit side of partners capital. So PL appropriation 9,000 each. Alright. So the corrected net profit we got it from the PL account. This one, this we have transferred to PL appropriation. No other appropriation left. So they are getting the share of profit. Done. I hope the connection is clear now. Then, so this is done. I hope we have put everything. Yes, the rent and the interest to be charged and the share of profit. This is what is to be shown in the partners capital account. Now we can close the partners capital account. How do we close? We total up both the sides. Here we are getting 2,09,000 for A minus 1,250. So the balance carried down will be 2,07,750. Okay, 2,09,000 minus 1,250. Okay. What about B? B's total is coming to 1,84,000 on the credit side, and there is nothing on the debit side. So it is 1,84,000. The total has to be the same, both sides. Here it's 99,000, nothing on the debit, so 99,000. Done. So we are done with partner's capital. Now come to C's loan. C's loan did not have an opening balance brought down because we did not take the loan last year. We are taking it this year, that too on 1st August. So we should be doing it here as by bank or cash, both are okay. We took a loan of 1,20,000. So 1,20,000 here. And then the interest part. See, this interest will be credited to his loan account. So interest on loan. This, if you remember, we have done in the previous video. If you want, I'll put it, when I post this video, I'll put it in the description, the link to the previous one. But it's all there in the playlist, you can check that. The playlist is, I'm keeping all the videos related to fundamentally strong, meaning partnership fundamentals, in one place. So please go through it. So this is what is it, we haven't paid anything. So end of the year, the balance carried down becomes 1,28,000. Clear? So I hope this sum is clear, and if at all you find anything not clear, you want me to explain some things better, like I got a comment from a girl saying that I need to do all the chapter 12 class 12 syllabus chapter wise. Yes, that's the plan. That is why we have started here in the month of March, so that we can complete comfortably all the chapters well in time. Alright, so I would request everyone to start solving and start getting seriously involved with this subject immediately, without further delay. Don't wait for your exams and terminals, please. Okay, so abhi se karna hai, अच्छे से करना है. So any doubts, you can always ask me. Please do not forget to press the like button, because it means that you appreciated my effort. That's it. And please do subscribe, keep the bell icon pressed, and please do share with your friends. Thank you so much. Take care. See you in the next class. Thank you.